Hi everyone, welcome. We've already done intros. Let's go straight into the conversation. So I thought it'd be interesting to start off with a little bit of data. I recently had a look into the data on Fintech-Funding across Europe in Q1 this year, and it was down 83% on the same time last year. Obviously that's not surprising to many of us, but it's quite a stark difference. Within that, it was really interesting to see that fintech's been overtaken by climate tech and deep tech in the same period. But the funding slowdown was really driven by a lack of mega rounds. We're still seeing quite a lot happening at early stages. Within the subsectors, what was quite interesting to see is that mortgages and lending was quite strong, as were crypto and treasury management solutions. So I wanted to start off by asking both of you whether you were surprised about that data, and especially with regards to those subsectors that were getting funding. Julia.
Hello everyone. 83%, it's a big drop, obviously. I think we are a little bit in a period of reset. I'm not too surprised by it. With everything that happened and the dramatic rise in interest rate that sort of triggered a complete repositioning of capital in the economy, the systems are changing, right? And we're seeing the velocity of money really slowing down. We're seeing asset price declining, rise in cost of capital and access to capital, which is triggering a flight to safety and liquidity. And obviously that's impacting a lot of the players in the ecosystem. And I think it's fair to say that all of the effects have not yet been played out entirely, right? It's still coming. But notwithstanding of all of this cycle, I think if we think about the end market size of fintech, it's still quite exciting and optimistic. So I'm not too surprised also that we still see early stage fundings and that investors are leaning in, because financial services, it remains one of the largest sectors of the economy, yet fintech still has such a small penetration in there. So you have this $10 trillion industry that's dominated by 100-year-old institutions that are in the very early innings of digitizations. And if you look at payment today across the world, it's still predominantly offline on POS or card present. If you look at how B2B transactions are done, it's on archaic messaging protocols and legacy clearinghouse, and even neobanks, right? They still have such a tiny share of customer accounts, let alone revenue share in banking. And so, if you think about this, as the economy is digitizing, every single dollar that exchanges hand, in a way, is an opportunity for the fintech's addressable market to expand. And so it remains a very attractive opportunity for investors longer term, because this demand will grow and the demand for more fintech product. I'm surprised, of some of the subsectors that you mentioned. I think, you need to disaggregate the performance of the company and the fundamentals of the company. But on the fundamentals, in my view, some of the companies that struggled in the recent markets all share the common theme of the need for cash, whether it is OPEX to fund customer acquisition or balance sheet funding for lending. So that surprises me a bit, but on the rest, I think the rest of the subsectors are doing fine, actually, and are still very exciting.
Yeah, and I guess I really wanted to ask you about are you surprised about crypto being so strong in the period as well? Because, we obviously saw so much market turmoil within the sector last year, so I don't know. Yeah.
Definitely. I think Julia already made really great points regarding all the other sectors. And then since my fund also only focus on crypto, so to be honest, I'm not really very surprising better data, because first of all, I think in crypto, in general, it has been very hyped for like many years already. And then since I started the fund 2 years ago, there are numerous new funds started to raise money as well. And imagine there are so much money from the funds side, then they have to also deploy the money within like a certain period of fund life. So I wouldn't be really surprised, like, there are just money crowded in the market to look for like new opportunities. And also with like so much like failures, so many failures events like happened for the past 2 years, there are also like apparently also new opportunities. And these opportunities with the condition of also bear market, it creates also like much lower valuation. So like people started to raise money also at like a more reasonable like valuation. So I think in general it makes sense to just in general not really surprising me, like there are actually more money flowing into crypto. Besides, it's also like a very fast growing, in my opinion, like very promising like area. So.
And I wanted to sort of start off by looking at the earlier stages, seeing as we're seeing that there's more action happening there. In terms of within crypto, what are the areas where you're seeing the most opportunities come towards you, or the most sort of high quality companies? Like obviously there's so many areas of crypto. Are we talking about more infrastructure kind of companies, or the more B2C focused stuff? Like where are you seeing more fresh startups appearing?
I think high quality is definitely a very interesting word to describe in crypto projects. If I have to really say like which area having more like opportunities or good projects, I think in general there are so many sectors that really like involved with so many new talents flow into the market. But then if you think about like if you check on the like top 20, top 50 like tokens like on the coin market cap, you see mostly actually like infrastructures like tokens. So I think it's natural that from the fund perspective, we want to like invest in such kind of like high ceiling, high growth kind of like sectors, because for a fund it's actually our primary like purpose is actually to maximize our LP's capital. So we want to invest in those areas where there's high growth possibilities. But doesn't mean like in other sectors it doesn't have high quality like projects. We definitely see like a lot of people saying like, oh, crypto doesn't have like a great use case and so on, but have to also on one hand, I think to some degree acknowledge it's still like relatively early. And then it has actually great like fundamental changes in terms of like a new technology, new ideology, all of this stuff. But then it will also take some time to have the kind of like collaboration and also market acknowledgement towards such kind of like technology. But then I think like areas, for example, quite relevant with fintech is like the payment part is definitely something would be very interesting to see. But also every area that is close to the capital, for example, you have your wallets, you use exchanges, these other areas, especially together with like FTX collapse, I think it's very important like area we started to also see like many projects, many founders started to focus on those.
That's really, I'll come back to you on talking about the focus post FTX in a bit. But Julia, I wanted to ask also about Index, because Index recently, well, I say recently, it was like back in November now, but launched a second seed fund. And I was interested to ask whether that was influenced by the market events that we've been seeing, that you've been sort of formalizing, going earlier and earlier, or whether that was part of the long-term strategy, like how much of that has been reactive?
Yeah. So Index been doing seed for a very long time, actually, because even at the time where we did companies like Robinhood or Revolut, these were seed deals, right, or Figma even. We used to do it from the venture fund, and then a few years ago opened our first seed fund, and then last year the second seed fund. So this is really more of a long-term strategy for us. Objective being, there are some trends that we really believe in, and if we find a founder that we think is uniquely positioned to go after that trend, we'd want to be involved with that company as soon as possible and be able to have the structure to work alongside that team from the very early days. So that's more the mindset behind the Origin Fund.
And right now, in terms of, like obviously more investing happening at the earlier stages, is this with a view to sort of continuing with the same companies as they mature over the next few years? And I guess my second question with that is, how different is seed investing with those companies now in terms of what you're sort of looking at, their path to profitability and their strategy focus, what you're advising them? How has that changed in like the last 18 months?
Yeah. So, we really back our founders for the long term. So yes, when we invest at seed, the goal is really to work with the founders for, as long as it takes to build a large business. There's no expiration on our support there. And regarding how it changed working with seed deals, I really don't think the macro context changed how we've been working with these companies. It did change the latest stage involvement, and how we've been advising our Series A plus companies. But at seed stage, it's so early, and it's really about, the vision, finding the market fit, building the initial team. That hasn't changed.
Okay, yeah, interesting. And in terms of, I used the word quality earlier, and you thought, oh, that's interesting. But it's only because a lot of conversations I've been having with investors, they've been saying, actually, right now we're seeing higher quality companies coming towards us. And I've been asking, what do you mean by that? And a lot have mentioned serial founders and also alumni founders. And now being such a good time to build for these experienced operators who have come across issues in their first unicorns that they were working in, whether it was a payments unicorn, and so now they're tackling like a deeper B2B payments problem, for example. So I wanted to ask like both of you, I guess Jasmine, I can start off with you, within crypto, because this is something I don't know too much about, but obviously crypto, as you said earlier, is like quite nascent as an industry. But are you seeing sort of experienced operators maybe that are coming from fintechs who were launching crypto products and now they're going into sort of specific crypto problems? I'm quite interested in what kind of experienced founders you're seeing at the moment.
I think like especially, 2 years ago, there were actually quite a lot of like fintech business models or like the pain points like wanted to be solved with crypto. For example, to do like cross-border payments. It would be much easier actually to use like a stable coin or some kind of like even Bitcoin or Ethereum like to make the payment because it's just like much faster. And then, my own example is like I have for example, like a bank account from like a Singapore. And then if I want to send like just a 7K euros to my friend, it actually got blocked. So it's just like very crazy, but if you do like with crypto, it's just that easy. So I think that is something like, having a lot of people like fintech entrepreneurs wanted to solve. And also like, for example, like a supply chain invoicing. Like these like small businesses, for example, take time to like receive the payments after invoicing. So this it can be also like in some way to be solved like with crypto. Or tokenization of like shares, like private shares to make it more liquid. So that is something actually in general crypto could actually bring on the table for the fintech like pain points. But I think it's just in general like all of these things as a crypto founder or like crypto projects, they have to deal with so many different like partners. They have to work with like educate all of these like big corporates like in the traditional world. They have to explain how does it work, how it benefits you, what kind of technology, what kind of API, SDK you have to like be integrated with. And then most of them just like, hey, we can use maybe like other fintech solutions where we are already familiar with, where they shown how the product actually is. So I think it's just like not really the time yet, like for my like understanding to really have the very real world like use cases. Mm-hmm. Maybe like in a few years, but I think at the moment it will be still very native, like kind of like a startup's gonna be more on the top of the market.
Interesting. And I guess same question really for you is, are you seeing sort of a surplus of these experienced operators coming at the earlier stages at the moment. This is certainly what I'm hearing from other investors, but I'm quite interested in, for example, we were talking about payments backstage, and what are the areas of payments that are sort of only understood by people who've worked in payments, for example, and what kind of opportunities are coming out of this market environment?
So what's very interesting with these second-time operators or founders is that most often they've experienced the problem firsthand, which is a really good thing, because they really deeply understand what's the customer need and the end need, and so it's often a really good head start when you start a company. There are definitely a lot of founders starting companies right now. I think it makes total sense. There are a few things. The first thing is a lot of them are leaving larger company who are maybe slowing down a little bit given the market, and so they're seeing that the path to IPO or the path to an exit might be a bit longer, and so they decided the right time for them to build now. I also think it's way easier to hire good talent at an early stage in this market, right? Companies, big companies, compelling companies are hiring less at lower salaries, so you can build very good teams very early on, which makes a huge difference. So, this plus the fact that we are at the beginning of a cycle, and that's obviously a great advantage to start a company, and a lot of amazing companies have been built in these exact conditions, and there are still investors funding pre-seed companies. So all of these factors together results in, of course, many founders jumping shift, which I think completely makes sense.
And I've also been seeing quite a lot of fintech execs leaving recently and then suddenly building something on their LinkedIn or stealth on their LinkedIn. So it's quite a mysterious time, but maybe I'm sure that you're sort of more in the know than I am as to what's going on backstage. I guess another question, just in terms of the opportunities that are coming out of the current macro environment, what are the kind of fintech subsectors that you think are best placed to shine when we're going through this period, and what kind of business models? Because the B2C shiny fintechs that were all the rage a couple of years ago are now a little bit more risky. So what are the subsectors you're most excited about?
Yeah, so we discussed the need for cash. Is today makes it difficult for companies to perform and actually raise more money. So, and I would put the consumer fintech in that bucket because today it's just so expensive to acquire new customers, right? But across the board, we see plenty of opportunity in payment. It remains $1 trillion market. A lot of people feel like a lot has been done already, and maybe everything has been done, but actually there are still a lot of opportunities to compress these margins even further and provide services that would be even more streamlined than what we have today. FX is another great market. It's a huge market with massive tailwinds and a lot of opportunities for further disintermediations of all the players in between the value chain. Asset management is another one where we're spending a lot of time. It's a massive market, and in the past decade with companies like Revolut or Robinhood, it feels that we've really built the access for the consumers to diversify their investments, and now there's a big opportunity to build the products to distribute through these platforms and to build more personalized mobile-first experience. So also a space we look at. The CFO suite, you mentioned treasury. We see a lot of it. We think it's very compelling, and especially in this market, it becomes quite critical to businesses. So I expect we'll see some of them really emerging as leaders in the market. So this is a few examples.
Yeah, and I have completely forgotten to mention the very obvious thing there, but SVB. And I was quite interested whether that was going to be something that planted the seed for more of these treasury management solutions among founders who are sort of figuring out a new startup right now. But I also want to mention the other huge sort of newsworthy market-moving moment, which was FTX last year, and talk a little bit about what that's meant for your portfolio companies in general. where maybe they're consumer facing, what kind of challenges they've been facing there and how you've sort of taught them through that. But also in terms of your own LPs as a fund and how you've had to sort of communicate around crypto as a viable investment.
I think it's definitely a very big subject like last year. And I think in general, so many funds were actually really badly, like heavily hit by it. I'm not saying like, I think we are just in general very lucky. We were not really putting any of our funds like on FTX. I think partially also because from day one, we know we want to be more focused on the primary market investment. So we don't want to do the secondary liquid fund, you know, in terms of like doing very often like daily trading in terms of that. So we were doing all the time like self-custody. It's also like we want to make sure, since like our LPs majority actually institutional investors, fintech groups. So we want to make sure like most importantly, we don't lose money for them. So that's why we do self-custody. But nevertheless, I think it's very common actually like funds put money like over there. But it also shows that a certain level of like a regulation is probably needed in the space, because they're actually basically doing like all the distribution work, they are doing actually all the listing work, they're actually having like their own VC arm to do like everything like in just one platform. So I think that can be really dangerous in terms of like many potential like fraud, which also like recently happened, I think with one of the biggest exchange like worldwide. I mean, they have like insider trading, like stuff, scandals. So I think it's like definitely needed, and also make the industry also to realize a certain level of self-custody, a new level, new type of exchanges is actually needed. So to really separate the trading part and also like custody part. So I would say that you know, certain failure also brings up many opportunities. So I also started to see many fintech entrepreneurs actually from, for example, like these unicorns, they wanted to do something that is fundamentally different as what is happening already like in crypto space. And we want to make it more secure, like more robust, in a more like a traditional like way, which is like really great to be provided as like more different perspectives into the space. So I think definitely it brings also like new opportunities despite of like all the damages it does like actually bring to the space, because it hurts so much like a confidence from the institutional investors to put money like more in crypto stuff. But I guess it takes time. And then in terms of our portfolios, we do have actually 2 portfolios put money like over there. And then, but luckily they still want to continue. So they still will like actually do like more fundraising. They don't want to like give up yet. So I think that is like good news, but they also have to face the reality. But also like in terms of, I think to go back a little bit of the first question you were asking, you know, some kind of like fintech business models coming into the crypto space, it also brings, because like there is going to be like clawback from like FTX, so there'll be more claims, and there will be such kind of distressed fund which is already existing in fintech, and then someone is actually building such kind of things like in the crypto space. So definitely more opportunities, but yeah, like a certain level of damage is done, but I think like in long term it's actually going to be like more robust. So.
Really interesting. And there's certainly, yeah, crypto founders I've spoken to have really been frustrated at the sort of reputational damage, let's say, but a lot of the fintech founders I was speaking to sort of at the beginning of last year who were moving into crypto had always expressed that they wanted to be doing something that was fundamentally changing things, as they said, rather than putting new packaging on things. And that's why I thought it was quite interesting to see that AI funding is just absolutely soaring at the moment. I've been putting this really silly question to a lot of investors by saying, is AI the new fintech? Because fintech is obviously dropping behind for investment right now. But there is that sort of hunger still to be doing something completely different. I wanted to just talk briefly about later stage as well, in terms of the sort of strategy pivot that most of these B2C companies especially have had to undergo in the last year. And given Index's portfolio, you've got some really, really huge B2C fintech brands. I wanted to ask what it's been like coaching founders who had been sort of used to the kind of growth at all costs and this really, really competitive customer acquisition journey, coaching them into sort of more long-term strategy on growth.
Yeah, it's been a big shift for sure for the founders and for us, because we've really moved at a growth stage from a market that rewarded growth at all costs, as you said, and this was the game to raise more and more fundings, to a market that rewards profitability and efficiency and burn ratios. And so what we've done with our companies, you know, I think the most important thing is to be in control of their destiny, and so we've really pushed founders to define profitable plans on their core markets. Obviously still investing in growth and still investing in expanding in new verticals or new geographies, but having their core, you know, being sustainable for the long term, and also being way more conscious about every dollar that is spent, and way more cautious about the burn ratios and the efficiency of how they spend. So this has been the shift, which has massive implications in terms of organization, in terms of what we focus on, in terms of prioritizations of topics, and growth as a result, right? So I think companies will be growing less, but companies will be growing more profitably and for longer. Yeah. We know that the funding gap has not yet been reached, right? A lot of companies raised in 2021, they still have a lot of cash, and it's very likely that this gap is going to come in 2024 or even towards 2025. So it's about, you know, making sure that you build the fundamentals to be able to raise the next round at this point.
And do you think that they will be able to raise those rounds?
I hope so, yeah.
Because I think that lastly, what I've been sort of on tenterhooks for, I started the year really having my eye out for M&A, and it's, I mean, we've seen some small deals and some quite predictable deals, for example, within like small neobanks and things like this. But I've not really been seeing any of these huge market consolidation moment. So I wanted to finish off by asking you, when do you think I should be looking out for that?
Yeah, it will come for sure. I mean, you know, probably next year I would expect to see way more market consolidation, 100%, either on, you know, on sub-segments where it is a multi-local expansion, and so you might see some geographical consolidation with one player buying all of the other ones in other countries and becoming a massive European leader. And we will also see this big platform aggregating a lot of standalone products for the same customers. That will be the two dimensions I see, and yeah, we of course know that it's coming, and we really have that in mind when thinking through strategies and working with entrepreneurs to navigate their own markets.
I'll keep an eye out then. Thanks both so much for the
Thank you.
today. Thanks.